All right, folks, we got to talk about why we dumped today. There's a couple of reasons. One is the stock market dumped today, and Bitcoin has been following the stock market. And we did actually start dumping yesterday, right as the futures came online. Now, there's a good reason for both the stock market dump and the crypto dump, and those two things do go together, and that is what we've been talking about, the Japanese carry trade, but that's only one of many reasons. Once again, for those of you that don't know what the Japanese carry trade thing is that Japan's interest rate for borrowing from the central bank has been about 0% for like the last 25 years. And it all of a sudden increased to its all-time high of almost 2%. Now that basically repatriates a lot of the liquidity that was globally back into Japan, thereby reducing global liquidity. Now that will happen slowly, but people are just reacting to what might actually happen if that liquidity is removed. Now, hopefully, that will be replaced by American liquidity as we cut interest rates. But how this works is because Japan's central bank is essentially loaning out at 0%, what's happening is big institutions take a loan for 0% at the Japanese central bank, and then they use it to buy US or other bonds at 3 or 4%, thereby giving them a 3 or 4% gain. Now, obviously, the central bank's rate is going to be a little bit lower than the actual rate you can get from banks, so maybe you can loan out from the banks at like 1% or something. Well, since basically their Fed funds rate is going to 2%, that means you might have to loan from the bank at 3%. And since American bonds are actually coming down in terms of yield, because the Fed's lowering interest rates, we're getting near 3%. So it will make it not worth it for the Japanese or other businesses to loan from the Japanese banks and then buy American bonds because you're not really getting any profit and the risk is too large. Now, that will actually draw a lot of liquidity out from American bonds. And I think it's mainly bonds. There might be some stocks and crypto, but it's mainly bonds. But them drawing the money out of bonds means there's going to be a lot of leftover bonds that are not going to be purchased. And they have to sell them. And how do you do that? You have to raise the yield of the bonds. And of course, anything that raises the yield of the bonds, lessens the liquidity of the bonds, is bad for crypto. And that will take overall liquidity out of the global market. And that's very, very bad for all markets combined. So that is why stocks and crypto has dumped. They're looking for that leave of liquidity from the overall global market, which will tighten purse strings, obviously. So that is one of them. One more thing is regulations, and not from the United States, this from China. Now, China did say they were strengthening, not implementing new regulations, but strengthening their anti-crypto trading regulations. And that has some people scared. Doesn't have me scared, has some people scared because I'm sure there were a lot of people illicitly trading crypto or doing things with crypto in China. Now, they had that ban since 2021, so it's nothing new. And the attitude towards crypto in China is generally really, really bad, but there are still some richer people and definitely party officials that are on the crypto train. But now, since they're really, really starting to crack down on crypto, that money might actually leave crypto. So they might be in a process of beginning that selling. So that's another factor that might have actually brought us down from a regulatory perspective, although it is not from an American regulatory perspective. So that is a little bit of unease. The other thing is the Tether FUD, which is FUD, might actually have some people worried. What does that mean? What's the Tether FUD? Well, Tether got downgraded, and obviously Tether provides a lot of liquidity to crypto. So it getting downgraded is a big deal because that means Tether is actually somewhat risky. It got downgraded to poor, whereas USDC was still good. Like out of 1 to 5, 1 being the best and 5 being the worst, USDC is rated a 2, while Tether is rated like a 5. I think there's actually ones below 5. I'm not really sure, but 5 is already poor. But that rating is kind of BS because they did it because only about 74% of Tether's reserves, and they did actually, I think, audit Tether's reserve this time, only about 74% of Tether's reserves are treasury or treasury liquid assets, what they consider treasury liquid assets, which is a small number, and the rest they deem as high risk assets. But the stuff that they deem as high risk assets would actually seem to us low risk assets. What am I talking about? Well, let me give you an example. For instance, low risk assets to us would be like AAA corporate bonds. Gold would be a fairly low risk asset, I think. And a couple of other things that are generally fairly low risk, they consider high risk. Now, Bitcoin would be considered a high risk asset, but they only have about 5.6% of their reserves in Bitcoin, which means even if Bitcoin went to zero, which is very not likely, they still would be able to back 94.4% of their tethered assets. However, it's actually more than that because Tether is over collateralized, so they'd be pretty close to 100% even if Bitcoin went to zero. Now, if Bitcoin went to zero, all the corporate bonds died, and gold went to zero, then they would actually be in trouble because they could only back about 75% of your assets. But the chance of that happening is not very good, and also if those things happen, you have a lot more than crypto to actually worry about. So the thing is, like, the actual threat to Tether is not very big, but it makes it sound scary because Tether actually has a poor rating. And the last thing that people are actually concerned with outside of the general market is MicroStrategy. And it's gotten a little bit more worrying because Lord Fong Lei, the prestigious CEO of MicroStrategy, who ascended the throne of MicroStrategy CEO in 2022, so he's not actually new as some people have reported, he said that if the MNAV of MicroStrategy falls below 1, they might be forced to sell Bitcoin. And ho, 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 what do you know? The MNAV of MicroStrategy is 0.95 at the end of November. So that might be kind of troublesome, honestly. Really, it is kind of troublesome. 0.95 by the end of November. So, yeah, there is a lot of trouble regarding all of this. Because if MicroStrategy sells, then the whole thing kind of collapses. They have a lot of Bitcoin. Even if they sell a little bit, that will actually get people to panic, and we might definitely be going down further. So I would actually hold off Bitcoin buys for a while until it settles down. Now, where do I think Bitcoin will bottom? I personally think it'll be somewhere between 40 and 60K. And of course, alts are going to suffer a lot if Bitcoin goes down that much. Although, if you've noticed recently, the dominance at CoinMarketCap is still 57, 58%. So Bitcoin dominance has actually not gone up during this retreat, but I think it will go up if we retreat that much further. But the 40 to 60K is if MicroStrategy doesn't sell a large portion. If MicroStrategy sells a large portion, we could be seeing 30K or even 20K numbers at this point. Let's not forget that because of FTX, we went from 69K to 15K in the last bear market. Some of you are thinking, well, ETFs are going to hold us up. Maybe, but maybe not, because, like a lot of the ETFs are retail and they're just buying it, and BlackRock's basically just acting as a custodian for that money. And if they sell off, BlackRock is going to sell off, obviously. So we don't really know if that theory is true. 69K to 15K, that is almost an 80% drop, like 77% drop. A little bit better than the 2017 drop, but because that was almost a 90% drop. Like a 77% drop. If we have a 70% drop from 126K, I mean, that would be, I think, around $40,000 or slightly under $40,000. And I believe MicroStrategy has the ability to be almost as much of a black swan as FTX. The reason I say almost is MicroStrategy actually has more Bitcoin by far than FTX, but I don't think MicroStrategy has as many dependencies as FTX and Terra Luna. Remember, it took both FTX and Terra Luna to bring us down that much. Now, basically, Sam Bankman-Fried screwed himself because he is one that brought Terra Luna down, which in turn brought him down because he wasn't smart enough to see that a lot of the places that actually was like his supporters actually depended on Terra Luna. So him bringing Terra Luna down cascaded into himself. Not really sure if Michael Saylor is really that stupid. I don't think so. I don't think he's intent on bringing anything else down. And I don't think there's that many dependencies because there were a lot of funds, even stuff like Genesis that was dependent on Terra Luna. So when that whole thing completely collapsed, it collapsed a lot of other industries with it. I think MicroStrategy is more standalone. It will definitely induce some panic selling. It will definitely induce panic selling, obviously, in some of the retail buyers, but I don't think there's any real companies that are dependent on MicroStrategy in the crypto sector. I don't think anyone's depending on MicroStrategy for their bonds or anything else. I think MicroStrategy is just standalone. There are a lot of like individual holders onto stocks and bonds, but if they go bankrupt, then they go bankrupt, and I don't think it'll affect any other companies. So that's why I say I don't think it has that many dependencies. I think the fallout will be a little bit better than FTX and Terra Luna put together, but it will still be a pretty big fallout, and I think it could actually bring us down into the 30,000s, if not the 20,000s, if they have to liquidate a large bunch of their Bitcoin. And their new CEO, well, not the new CEO, their CEO said if their MNAV falls below 1, which it has, they could possibly sell some of that Bitcoin. So a lot of problems here. So you got Japan, you got the Chinese regulations, you got the Tether FUD, and now you have MicroStrategy and that CEO making an announcement. Not looking so good right now. So a lot of like possible downward pressure, a lot of FUD that's going to come. So be careful and invest wisely, folks. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.